Donald Trump's tariff wave has rocked global markets, but its impact in India is playing out unevenly. IT stocks were hammered, while Pharma Pack enjoyed a strong rally. The Nifty Pharma index surged 3%, but IT stocks tanked as much as 9%, dragging the IT index down by 4%. Now, despite the turbulence in sectoral indices, the broader Indian market held its ground. The Sensex dipped only about 300 points, defying the sell-off seen in global markets. The market breadth remained positive as India seemed like an oasis of calm amid the global market chaos. But why did that happen? Trump's sweeping tariff hikes exempt Indian pharmaceuticals, a critical win for the sector that supplies over 40% of the US's generic drug demand. However, the IT sector isn't as lucky. Now it's not the tariffs themselves, it's the risk of a US economic slowdown, higher costs and potential retaliatory tariffs that threaten the sector. The big loss will eventually come in the form of US discretionary spending, which can have medium-term consequences for the economy if the tariff war heats up. This eventually may lead to some impact for IT firms, global brokerage firm Bernstein warned. Now let's take a look at the winners and losers after the tariff announcements. Devarsh Vakil of HDFC Securities outlines the shifting landscape. Trump's tariffs don't impact local businesses broadly, but will weigh on export-heavy sectors. Indian pharma stocks with significant US revenue remain unscathed, while IT is vulnerable to an economic slowdown. Among big pharma winners are Sun Pharma, Torrent Pharma, Zydus Life, and Dr. Reddy's. On the flip side, IT giants like TCS, Infosys, and Wipro are staring at headwinds if US corporate clients pull back on spending. Talking about metals, steel and aluminum already have a 25% tariff on imports and hence were exempted from reciprocal tariffs. Moving on to auto and auto ancillaries, auto and auto parts are already subject to Section 232 tariffs and are exempt from additional reciprocal duties. Tariffs of 25%, which were already announced but implemented on 2nd April. Hence, they face no additional negative impact from reciprocal tariffs. Textiles. India will have a two-way impact of these reciprocal tariffs. First, higher tariff on competing nations to support market share gains, as China, Bangladesh and Vietnam are charged at a much higher rate of 34%, 47% and 46% respectively compared to 26% on India. Secondly, the increase in prices to end consumers will reduce the overall demand, shrinking the market size according to Manish Jain of Mirae Asset Capital Markets. April 2nd, 2025 will be remembered as a turning point for US trade policy. Dubbed Liberation Day by Trump, the new tariffs hit at the heart of countries with what he calls unfair trade practices. India's 26% tariff is significant but pales in comparison to China's 54%, Mexico's 25% and Vietnam's 47%. What's next? Anirudh Garg, partner and fund manager at Invasset PMS, highlighted the broader macroeconomic risks. Given the significant increase in tariffs on major trade partners and expected retaliation by other countries, inflation will increase, leading to a global economic slowdown. This will increase the recession probability in the US. Also, in an inflationary environment, the Fed might delay rate cuts. Gold, crypto and bonds will gain traction, while equity markets will remain volatile. India may seem better positioned than its peers, but risks remain. China's retaliation could flood the market with excess supply, putting Indian manufacturers under pressure. The US recession risk also looms large. MK Global warned that trade-led US recession takes everyone down. There are no real winners, not even relative ones. That's all in this video. Thank you for watching.